Traders, welcome to the AMA for the HFT real-time algo with an algo flow. So good stuff. So first off, can't guarantee results. Products and services are for educational purposes. There is risk in trading. And if you have any trouble, my internet is acting goofy today. Hopefully we can power through. If you have any sound issues, would you be so kind as to just type in the chat box and let me know? I've got our main man Jeff here with us from the dev team as well. So if for some reason I lose you, he can always give you some song and dance and entertain for a couple of minutes. But as you know, can't guarantee results, right? We can do everything we can to educate you and help you be able to make the most of the tools. Okay. All right, so let's dive in and take a look at what this thing can do. So we'll start off. You guys still got me, by the way? Are we still live? I just want to make sure everything's still okay.
Your
Give me
sound
another
is
yes
good
in the
now. It
chat
was
box.
breaking up before, but it's good now.
It seems to cut in and out. Like it's really great a lot of the time, and sometimes it's just not. So it's weird. Very strange. I'm gonna disconnect from data for now. And then if I need to pull up data again later, we can do that. But yeah, I've got some things. Let's get out of there. There we go. All right, so hopefully this will save some bandwidth. I don't know. Do whatever I can to try to help. Okay, so HFT algo. So what we're going to do is we're going to look at the signals. We're going to look at what everything does. We're going to talk a little bit about order flow. How many of you have never traded order flow before or never studied order flow? Give me just type new in the chat box. If you've never studied order flow before, let me know. New. Okay. So some newbies. Cool. Well, welcome to the world of order flow. It is a very interesting world, and it's deep, you know. It's not complicated, but there's some things you need to know. Okay, so we'll go through some order flow concepts, help you understand what it is, what things are doing on the charts, and what it all means. Actually, why don't we start there and take a look at what everything's doing now? Oh, I disconnected, so I lost my settings. Dang it. Okay, hang on. Let me reconnect. I have to be connected. And hopefully it will cooperate. I forgot you got to be connected to run an algo. I mean, it makes sense. You would think that would be pretty important. If you want to run an algo, you need live data.
On the chart, yeah.
Yeah, so let me go ahead and pull this up. While we're waiting, why don't we see if we can pull it up on the analyzer and take a look. All right, so let's go into here. I'm gonna go to the chart and I'm gonna go back. We'll go back to the beginning of this session. Looks like there's a lot of trades on this one, which is cool. It's fine. Okay, I'm gonna zoom way in and I'm gonna make the bars smaller. There we go. Reconnected. Cool. And then let me change the color of the background so we can see the text. Let's try that. That's better. And let's get rid of some grid lines. Let's go not visible. Okay, cool. There we go. All right, so first off, there's some things you need to know. Let me make these even smaller. Be nice, easy. Okay. So with order flow, so what is order flow? Order flow is like taking a look inside the candle to determine what the markets are doing and what's really happening to cause the market to move up or down at any one time. Now, order flow is micro analysis, meaning it's real time, it's real deep, it's exactly what's happening right now, and that's it. So most of you understand you have, you know, bid and ask, right? You might have at any given time, you might have 10 asks here, and then you might have, 5 bids down here. and ultimately price will move up and down, and the bid and ask will move, right? Most of you are familiar with the dome, which is depth of market. And really what it looks like is you got a bunch of prices on the left and you got a bunch of prices up on the right. And you'll have some orders here and, 15, 11, 9, whatever the case might be, and so on the other side. You might have 15 here and 10 and whatever. We'll just make up some numbers. Okay. So these would be the orders that are resting above price, which would be the ask, and then we have the bid down below. Now, ordinary level 1 data is only going to give you bid and ask. This is level 1. Level 1. Level 2 is going to give you additional levels on the inventory. Inventory meaning the bid and the ask, means that these orders have not been completed yet. Okay, this is going to be a crash course in order flow. Means those orders are not completed. They're inventory. They're sitting there waiting to get executed. Okay, so most of us understand those as limit orders, right? If you put an order to go long down here at 17,776 and you put a buy order, it is a limit order. And you can see that resting on the inventory, assuming you're actually putting it on the market. You can see that resting in the inventory. As soon as you put an order in here, let's say, then it would show. Okay, so that is inventory. Then we have the auction. Auction makes orders complete. And now these are no longer inventory. They're auction, they're completed orders, and they would be considered, part of the volume. And what happens is then if you've ever seen the time scale, you see that some people call it the ticker, and you'll have a ton of orders coming in and it'll come in fast and furiously, right? The time in sales is the completed orders. Okay, so in the dome, you have the inventory, and in the time in sales, you have the auction. That means that these orders are completed, these orders are pending. So far? So if you ever watch the tape and you'll see these orders and it'll scream in and they come in fast, very fast, multiple orders per second, multiple lines per second, and it's always moving. And you'll see basically the receipt of the order. So when you go to buy your groceries, you have a receipt. On the receipt, it's going to say what time you made the purchase. It's going to say what you purchased. It's going to say cost. And then it's going to say, or price. And then it's going to show, quantity, right? So let's say you take a trip to Wisconsin. I just was in Wisconsin last week, so just use that as an example. So you go to Wisconsin and you go to the cheese mart and you buy, you're a cheeseaholic, and you buy 5 blocks of aged cheddar. I don't know, whatever you like. Okay. And then you buy it at $3.25, and you're buying, cheddar, whatever. Again, random, and it's, we'll stick with 325. 325 in the afternoon, right? So this is your receipt that you get after buying your purchase. This is exactly what's happening in the time in sales. And it's showing what time the order came in. Obviously, what you're buying is what you're viewing, which would be, be NQ. Your time of the order, the cost, in other words, the price that you executed your order, the quantity, how many contracts did you execute, and whether it was, ultimately you can see buying and selling. But as a hint, you can't have an order that's executed without a buyer and a seller, right? So you just kind of know that that's the case. But in the time in sales, it might show uptick, deck. Did price go up? Did price go down? And then that will ultimately sometimes give you a different color in the time in sales. Okay, so that is how the orders come in, right? You've got your ask here. You've got your bid down here. Is that noise? Was that you? Okay. You've got your bid and your ask, right? So let's give an example here. of how order flow executes and moves the market. Okay, so that is kind of step one, learning what's happening. Step two is we're going to go a little deeper now. So let's say you go to buy a car. Okay, you want to buy a new car. The dealer has an asking price, also sometimes known as MSRP. They say we want 30 grand for this car. Maybe it's 50. I don't know. Cars are expensive these days. Okay, so they want 30 grand, and you, as the buyer, you don't want to pay 30 grand. You want a deal. You want a discount, right? So you come in with a price in mind. Let's say it's 26. Okay. And let's just assume that the markets are not chaotic and you can actually get a discount. And so you haggle, right? You come to some sort of an agreement. Odds are sellers not getting their MSRP price. And also odds are you as the buyer are not getting your discount price. Somewhere in the middle is where that transaction is going to take place. Well, the same thing is true of the markets. That's how the markets move. So if you have sellers here at one price and you have buyers down here, it comes down to supply and demand. If there's a lot of sellers, let's say you have 50 sellers here and you have 20 buyers here. What happens is some of these sellers that are more aggressive are going to come down to find buyers because the buyers are not going to the selling price because there's less buyers than sellers. There's more supply than there is for demand. Therefore, sellers come down and sell at discount because they want to offload their inventory. So this would be considered aggressive selling because the sellers are not waiting to do price in the middle. They're not waiting until the buyers come up. They're just saying, I want to be out of this. I'm selling it now. And that's it. So that would be considered aggressive selling. If the buyers say, forget it, I'm not going to haggle. I'm just going to go and pay the MSRP because I want that exact car and I want it now and I don't want to wait. And that's how you do it. That would be considered aggressive buying. So if you have aggressive buying, that causes price to go up. If you have aggressive selling, that causes price to go down. Well, how are these orders filled? If you are an aggressive buyer, you are going up to the ask price to complete your order, right? That is what shows over here is the ask. What shows over here is the bid, right? So you have the bid and the ask on either side, and that is taking what is shown in the time and sales and it's plotting it here, but it's plotting it on the right side of the market. So now if you go to the asking price, you as a buyer are placing a market order. The seller is placing a limit order. Remember, they put their asking price here. Let's just put 100 for easy math. Okay, your asking price is 100 and the bids are at 98, but you say, I don't want to wait for sellers to come down to 98. I feel like I'm going to miss out. So I'm going to go pay the 100 even, and I'm going to place a market order at 100. Well, what's plotting here is the ask, but this could be considered aggression. And that's what we're going to look at in how the markets move based on that aggression. So when you see things like stacked imbalances, what's really happening here, these are bids, right? All bids getting executed. Well, what happened? Sellers came down to do business at bid. So if you see aggressive bids, that's actually a sign that the market's going to go down. If you see aggressive ask, that actually means price is going to go up. Look at another example. And there was aggressive bids in here, but then price didn't go up. Right? There was aggressive bids, their price didn't go up, which is interesting. Aggressive ask, I'm sorry. And price go up. So it's not 100%. Now this is also, I think this is, yeah, this is NQ. So there's a lot of ticks. Okay. So that plays a factor, but here's a good example. You can see a lot of orders coming in on that side, and those are market orders coming in, getting filled. Okay. So you do not need level 2 because level 2 is just inventory. It's only showing you what is pending orders, not what is filled orders. Cool. So you don't need level 2. Level 1's fine. Yeah. You'd only need level 2 if you want to see the inventory, what's pending, which this algo doesn't trade based off pending, only executed orders. Yeah, so that is a quick overview of what's happening. Really what you need to know is based on when these, I'm trying to find some examples of some stacked imbalances that I can show you. Let me go back a little more. Let's go to like 9:30 because we're definitely going to see it then. Yeah, there we go. So remember we talked about bids are over here. So if you have a lot of bids, that would mean that price should go up. Should it go down? It's not always that easy. But what we can say is that the sellers were aggressively going down to fill those orders and price went up on positive net delta. Yes. And then price went up. So just because they're stacked imbalances doesn't necessarily mean the market's going to keep going. In this case, those orders were absorbed and it put in and then ended up going up. So then the other thing that we need to know is net delta. What is it? So net delta is going to be these numbers you see here on either side. Now, I admit it's a little bit difficult to see it here because there's no negative and positive signs. I'm used to looking at it a little differently. But in this case, we have -6 net delta. So what does that mean? If you take all these orders and all these orders and you subtract them out, if you get a negative number, that means selling aggression or selling. If you get a positive number, that means more buying than selling. It's a better way to put it. More buying than selling. Negative number is going to be more selling than buying. In this case, it puts the orders above or below based on positive or negative net delta. Here's the easiest way to see it. Just look at the grid. If this is green, you got positive net delta. If this is red, you got negative net delta. Okay. So, all right. So it's important to go through some of this stuff. We want to just give you a tool, and there's a lot to look at here. It's not complicated. It's just there's a lot to go through. Right? But we don't want to just give you a tool and not have you understand what's actually going on here. Okay. So give me 1 second here, guys. All right, sorry about that, guys. Had somebody at the door here. So, cool. So there's a couple of good questions that are coming in. So I want to kind of dive into these here, and then we'll jump back into going over the grid down here below. So zero prints, how does that influence? Zero prints means that there was just no orders completed on that one side. Yep. Means very fast price movement usually. A lot of times you'll see that on news releases or market open, where you'll see like no orders get filled. So yeah, well, this one froze the tape. So anyway, yeah, that's what that's doing. Order flows are plenty of buyers coming in, but price goes down, vice versa. Looks like Jason says this is absorption. Yeah, we'll look at absorption. There's actually a signal, what's sort of a signal. Actually see the you can actually see the absorption. So we'll show you that too. Absorption, think of it this way, is like you've got buying, buying, buying. And remember, we talked about there was sellers up here with their asking price waiting for buyers to come up to that price and fill those orders. So as the sellers start executing their limit orders, that's going to show in the form of absorption. They're going to absorb those orders. And then oftentimes you'll see a slowing, you'll see another peak, and then a dip. And that's your sign that it's moving. We'll look at some of this stuff together too, for sure. I'm going to show you actually some stuff on NQ2 because I have a theory that I think will be really cool that we're going to go through together. So this is just kind of an added bonus. How does the algo tally the numbers? Yeah, so it's based on the time and sales. It's taking all those orders that are coming in from time and sales and it's plotting them on the bar. That's what's happening. And this is called, you might have heard it as a volumetric bar. That's what these are. Good stuff. Okay, so let's keep going. So net delta, more buying than selling, selling than buying. So if you have more buying than selling, that means price should go up, right? Not always. It's not that simple. If it was, we'd all be millionaires and we wouldn't be in this event. If you have more sellers than buyers, price should go down, right? Well, we have positive net delta, price went up. Positive net delta, price went up. Positive net delta, price went down. Hang on, I think somebody's coming in the door again. Bear with me 1 second, guys. Sorry about this.
Okay, I'll chime in here while Jim's busy. So the question was
Nope,
asked.
I'm back. Sorry.
Okay, go ahead.
Go ahead.
I was
No,
just,
no, no, you go.
okay. So the question was how does the algo tally the numbers in order to execute, not understanding what the threshold is. So if we're talking about stacked imbalance, what we're doing is we're comparing the numbers on the right side of the candle to the numbers on the left side of the candle. And when one side is larger than the other side by a factor, let's say a factor of 3, and they have to be stacked, which means they have to be sequential, like consecutive levels. So when you see like 3 or 4 highlighted numbers, like what he's marking right there, those are highlighted because the numbers on the other side are much smaller. And I think the criteria in the it's a setting. I think it's a multiplier of 3, so it's exceeding the multiplier of 3, which means it's stacked imbalance. And what's on the right side, it's on the ask, which means it's a bullish signal. So it's a long. I hope that answers your question.
And we can set the number of balances here as well. So you could require 3, 4, 5, 10, as many as you want to get that signal. The other thing you can do, which is very important for NQ especially, is ticks per level. What this is doing is it's not plotting every single level on NQ because you're going to get a lot of those zero prints because NQ moves very fast. Instead, what we've done is we've bundled 3 ticks together as one level, and it's using the order flow based on that. So you want to talk about something that's like super high tech. This thing does it all. So you've got multiple levels that come in together. It's important for things like NQ where there's 40 ticks per minute versus on ES might be to 10 ticks per minute. This might be just 1 tick per level, but going to 4 on NQ is important, 3 or 4. So that's an example of what that's doing. And you can set the percentage required. You can set the multiplier and you can set the minimum number of stacked imbalances. So minimum imbalance percent means comparatively to the other orders. And so that will play into it. You can optimize all this stuff. Of course, this is all in the manual. And so so you'll want to take a look at that to go through in more depth. And the manual will go through some of this stuff too. Okay. So yeah, so net delta is going to be the difference. And then also you'll see there's a number of things. I'm going to change colors because that's yellow. Well, let's go to black. So now we have cumulative delta, which you guessed it, add the deltas together. What's, 92 minus 14, because that's negative. And if that was set to just the two, there's 92, 14, and then you'd add, 13, you'd add 123. So you can set how many bars to calculate cumulative delta. Now, most platforms and most tools are only going to do cumulative delta based on, cumulative based on what is happening for the session for the entire day. So usually that would open up at 6 o'clock p.m. at 1800, and the cumulative delta is going to start calculating from there, and it's going to add up all the net deltas across all to give you a number. Well, if we're trading at 10 a.m. on NQ, do we really care that much what happened at 3 o'clock in the morning? No, not really. Like, that's not telling us what's happening now. I mean, sure, it's great if you're trading on a 30-minute candle, but these are 40 tick range bars. So we don't want to know what's really going on that far back. So we want to set the number of bars to calculate the cumulative delta. Tell you how important that is and how cool it is that you have access to that. It's huge. I have used this to my advantage more times than I can count. It's fantastic. It's very good to have that capability. Then we go into bid ask percent. So what this is doing now is it's taking the percent difference between the bids and the ask. That's what's going on here. Okay. That's the simplified version. If it's above 50, it's going to show like this, and it's going to be green. Notice that if the cumulative delta is positive, it's green. If the delta is positive, it's green, right? If the bid ask percentage is above green, if it's below 50, it's actually going to show as negative 50, even though that's technically not possible, but it will also color red. Okay. So that's happening there. Then we have percent delta. Okay. So what is percent delta? That means if you were to take the total of volume for that bar, which is the next one, which is 933. So that means the total volume executed in that bar was 933 contracts. Then we take the net delta, which is 13. 13 divided by 933 equals 1.4%, which is percent delta. Do you need to know all this stuff when you are actually trading? You don't need to know all these percentages. Okay. What you do need to know is what is important and what, what you need to pay attention to, right? Cool. So, and then state is a good question, means if you're green. If you're red across the board, it's going to show red. If you are white, that means you don't have all four of these boxes coloring green. This is very important because that's what makes up our confluence signal, which we're going to look at today. That's what makes up the confluence signal. If you got all green, you've got confluence. But the signal is only going to appear on the first time that that happens, which would be actually right here. Okay. So that means in that bar, you have positive net delta. You have positive cumulative net delta, meaning you went from red to green. Then you have positive bid ask percentage, meaning your bid ask percent is over 50. But there's also this number here, which is in this case 29.6, meaning you have very strong net delta to one side because you have 123 versus a total volume of 415. So what this is saying is that not only do you have positive net delta, you have very strong positive net delta. which is certainly a factor. So if this is larger than X percent, it's going to now color these. So this case, 3% was too small, 1.3 was too small, 10 and 8 were big enough, 18, 22, 29, obviously those are big enough. But you have a threshold that you can set in here, which is right here. Minimum percent for cell coloring right there. It's this guy, which you can't see because it's black. Let me make it yellow. There you go. This one right here. So anything that is above 7% is going to color the grid for this right here. Cool. Why is that important? Because that's your confluence signal. If you have positive net delta, you have positive cumulative delta, you have positive bid-ask percent, and you have positive percent delta, but not only that, it's greater than the requirement. If all those factors are true, the state's going to be green. You're going to get a confluence signal, assuming that the previous state was not green. Okay, so that's our confluence signal. Okay, let's take a deep breath. We just went through a lot of order flow stuff. And unfortunately, I didn't have images to show, but how you guys doing out there? Doing okay? Hanging with me? Anybody have any questions that you want to clarify before I move on to some of the other signals?
Let me mention something.
Yes.
A lot of these questions are answered in the user manual. So for instance, if you go to the user manual, you look at the confluent signals section, it defines what each component is and then what the rules are for the signal. So it has to do with the state, the net delta. I'm looking at right now, cumulative net delta. So it's really listed all there. So it's a really good document to get a hold of. You can just download it from the ARC site on the download page.
Yep, absolutely. Definitely go through the manual, guys. This is a high-level overview, just designed to kind of expose you to it again, audibly and visually, but the manual is going to give you a good visual reference as well. And if you ever go, what was this one again? You have the manual to refer back to, which is great. So definitely, yeah, absolutely 100% go through it. In this case, you need it. You need it for this tool. You absolutely need it. So cool deal. Let's move on. Okay, so next we have trapped traders. Ooh, other deal? What? Not sure. Oh, this would be for like optimization. Is that what you're asking? You can change it to optimizations. Okay, trap traders. What trap traders are, think of it as aggressive that got trapped. That's technically a trap trader signal actually as well. So you have 33 contracts, then 18, then 6. And what you have is your orders are tapering off and then price closes down. That would be trap traders. So these traders that are trying to buy got trapped, right? So that's trap traders. Again, in the manual, stacked imbalances, that's going to be this right here. That's a stacked imbalance signal. You had positive, positive delta and you had buyers going up to the ask. Okay. And that's what that aggression is there for, levels deep. And therefore you got a stacked imbalance signal. So that's what that one's doing. Delta divergence means that you put in a higher high on negative net delta and a bearish close. That's what delta divergence is. Confluence, we already talked about. Cumulative delta look back. That is going to be the number of bars that you're going to look back for the cumulative delta on this grid. Okay. That's what that's doing. Also, this factors into your confluence signal. Minimum percent, we talked about flush reversals. Let's talk about flush reversals. Let's talk about it. Flush reversals are like my favorite thing. I'm just going to tell you. I mean, I've got the mic, so I get to tell you what I like and what I don't like. Flush reversals are my favorite. What this means is you had positive net delta, but you had a bearish close. That's a flush reversal. If you trade them in the right locations, you can do very well trading this signal. It's actually what I trade on order flow. Now I trade with other factors too, but I trade it somewhat manually, which hopefully we'll be able to code something there at some point. But let's look at another example. So we have price going up, up, up. Here we go. Here's an example. Positive net delta, bearish bar. It's like the two don't go together. What's happening is price and volume are diverging, which is great as a reversal signal. And it's something that I love trading. So those are fantastic. I highly encourage you to do some optimization with flush reversals. They're great. As an added hint, crude oil is probably a good one to look at for that signal. Okay. But that's what flush reversals are doing. Ticks per level, we talked about that. If you're on NQ, you probably want to bump this number up versus ES, you don't really have to. Minimum combined signals. Okay. So minimum combined signals means, let's say you want to trade with delta divergence and you want trap trader. As a hint, you can't have delta divergence and flush reversal. It's not possible. But then you want to have a stacked imbalance somewhere in that candle as well. You turn all three of these to on, and then you require a minimum of 3 signals. What's going to happen is it's only going to trade if you have those 3 as a factor. You can also set it to individually on or required or off. So you can do it that way too. There's so much you can do with this algo. Like no 2 traders will ever trade this the same, plain and simple. It's just not going to happen. There's way too much that you can do. And it's a good thing. It's not that it's it's not that it's complicated or anything. It could be if you make it complicated, but it's there's just some things you need to know. So minimum combined signals. Signal bar threshold type. Minimum signal bar size, price and ticks. Jeff, I'm gonna need you on that one. I can't remember what that one does.
Okay, so let's say you're trading stacked imbalance signals. Well, and it's a 15 tick, or this is NQ. This is a 40 tick range bar.
Yep.
So you could have a signal at the very beginning of that bar printing once there are 4 price levels that are printed for that. In other words, when that bar is 4 price levels high,
Sure,
from high to low, then you could have a signal. But let's say that you want to have that bar develop a little bit more before you take signals on it. So what that setting does is it says, well, the bar has to be a certain size before we'll even allow signals. And there's 3 ways to measure the size. Price just means how many ticks in height from high to low is that bar. And show the other ones. Yeah. So, and tick count, typically wouldn't use tick count. We kind of put all the options in there. Tick count is like how many ticks have come in on the tape while that bar is forming. So that number could be wildly different depending on, like on NASDAQ, it'll be like 5,000 or 10,000 or some big number. Typically people will use price in terms of number of ticks, or potentially if you're using volume bars, a certain amount of volume has occurred in that bar before. Let's say it's 1,000 volume bar, and you might put 300 volume. So you have to have 300 a volume of 300 or greater before signals will be taken in that bar. So that's just what that does, is it requires the bar to be a little bit more mature before it closes instead of just allowing signals from the very get-go. That's what that means.
Yep. Makes a difference on the intra-bar setting, right? So you've got intra-bar and then you've got bar close. Intra-bar means as soon as it sees the conditions, it's going for it. This is going to be most common with the stacked imbalances, as we can see here, where this is the signal that's plotting as the stacked imbalances. This is intra-bar, meaning as soon as this condition is met, it's trading. It's not waiting for the bar to close. Okay, so that's what that's doing. And that's the whole point of these settings, actually. Here's an example. It'll also freeze the tape. What that means is as soon as that comes in and you've met your minimum signal price in ticks. Now, remember, these are 3 to a level. So this is actually 12 ticks. Sorry, 16. Yeah, 12. 12 ticks here. So as soon as that comes in, you're getting the order and you're in the trade. So you don't have to wait for bar to close and so on. So cool. Entries, stop losses. This is all in the brain training, which is also in the members area. So be sure to refer back to it. Optimal bar size, no, but I could give them to you if you want to tell me which symbols. I can give you those. Flush reversal is off. Yes, this is stacked imbalances on this one, on this setting. Cool. Yep. What happens while you're trading? Auto trade is turned on. Computer accidentally shuts off. As long as you on. Yeah, good question. So Angel's asking, what happens if the algo's running and your computer shuts off or something along those lines? The orders, it would be unfortunate. The orders that are on the market, you know, obviously if you're in a trade, you're in a trade. The exits, if those stops and targets are not local on the market side, then you'll be stuck in that trade until you can either call your brokerage or your prop firm and tell them to get out of the trade. The algo will not place new trades though, because your computer has to be running to place new trades. So yeah. Yeah, cool. So we're good on settings. We're good there. Let's go into something else. So this particular setting, that was, you know, there's a few things you want to look at, and we're going to talk about optimizations and how to optimize. Now, I'm not going to go through every scenario on this one. There's a lot you can do with it, but I do have a theory that I want us to run through because I think a lot of traders could really run with it and do some good. So with optimization, what type of things you're looking at? Obviously, you're looking at net profit. You're looking at profit factor, which is gains versus losses, profits versus loss. You're looking at max drawdown as a huge priority for a lot of prop traders, right? You got some prop traders in the house. I know you're out there. A lot of our traders trade with prop firms. You want to know that you can hit profit without breaching your max drawdown, right? I would argue that this is more important than anything else if you're a prop trader. So you need to be able to manage your drawdowns and scale profit. That's the objective. Number of trades, win percent, you know, this is all going to play into risk reward, which is this number, 0.69, meaning that your average win was 0.69 of your average loss. Okay. Now, in this case, this setting is very active, 20 trades per day, quite a bit. So that's what that setting's doing. This one is stacked imbalances. There is another template I can pull up. That's NQ again. Sorry, I got multiple windows pulled up on the same. There we go. And then we have, this one is confluence. So we'll actually look at this together on another chart here, but this one is set for confluence. And again, you know, good profit factor, good drawdown, good profit. Looks good. By the way, we have a competition coming for whoever can put together the best optimization template for each algo. It's going to be a nice little competition we're doing. It's going to be fun. Sorry, I got something in my throat now. I'm just falling apart over here. All right, so let's go look at the chart. So I need to enable this and we're going to go check it out. And actually, while I'm at it, I'm going to save this so I don't lose this. This is MNQ scalp theory. Go through that in a minute. Let me enable it. I'm going to show you what's going on here. So this is where we kind of shift our mindset into being able to figure out ways that we want to use the algo. How do we want to trade it? Now, this algo can do a little bit of everything. So if you want to trade reversals, cool, you can do that with this. You want to trade breakouts, cool, you can do that with this. You want to trade trends, cool, you can do that with this. You want to trade pullbacks, cool, you can do that with this. If you want to trade semi-auto and you want to just turn it on and off as you see conditions, cool, you can do that. Traded areas of interest, yes. Trade it as confirmation with other tools, yes. It's great. It does really, really well. So there's a lot you can do with it. So as a trader, you get some opportunity here to kind of tell the algo what to do. Within reason, there's some things the algo is just going to not perform according to what you're looking for, but for the most part, it can do quite a bit. So it's pretty slick. All right. So to answer Daniel's question, okay, so ES, I'm just going to give you ranges. I'm not doing volume and all that, but we'll do ranges. ES is 8 to 10. NQ is like 40. YM is going to be like 15. RTY is about 15. Crude oil's 10. And gold, you probably want to be 8 to 10. Okay, so those are your ranges you want to go with. Cool. Sounds good, TJ. That's great. All right, so what the heck do we have going on here? So I have this wild idea that when it always starts with a theory, right? You perceive it's like a hypothesis. What do you think is a possibility? You come up with a theory and you start trading it. So what happened here? We have a higher high. Price is kind of starting to rotate, and then we get the push down. Well, what happened in net delta? I'm not going to zoom all the way in, but you can see our state here is white, 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 white. Why is it white? Am I looking at that right? Hang on. Let me zoom in. Sorry, I lied. I am going to zoom in.
I think
So
that's the absorption.
Okay, cool.
That's not part of the
That's
signal.
Yeah, that makes sense. We'll look at that. So the state here is green. Then we flip to white. Then we flip to red. But notice we're not all red yet, which means we don't have a confluence signal here. We get all green, but we were already in a trade. So the theory is that as the market starts to slow down, net delta starts to shift. We got -7, -13, back to positive, 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 negative, bigger negative. As soon as we flip, where we go from green cumulative delta to red cumulative delta, that's a sign that the rotation has happened and we've got confirmation in confluence across all of those metrics. Okay. So the idea would be, well, if the market is rotating, what do we need for a good, strategy? What do we need? Right time, right place, right direction. That's what we need for every strategy that we trade. Right time, right place, right direction. So the direction is confirmed by the rotation of the market, by the shift of net delta. The place has to do with when that signal came in, and that has to do with timing as well. So you've got all three of those things. Now, you may look at even saying, well, this is my place because this is an AOI, and I'm interested in selling short here because this is, heavy supply area, or it's expensive, or it's, retail price, or whatever you want to say. But the idea is I get the signal. I want to enter the market, but I don't want to just enter the market and take little scalps and little bits every time it flips from green to red to green to red. My God, it's just chaos. What I do want to do, though, is I want to get in and I want to leave a runner on and let this thing go. So I'm going to take profit here and then leave a runner on to take profit on its trail stop. And more importantly, I'm only going to take one trade in each direction. I'm going to get as much as I can out of the short, and then I'm going long. Get as much as I can out of the long, and then I'm out. So it's a different approach. NQ will give this to you. Now, notice I've also changed this to 20 ticks. Now, why on earth would I do that? And it goes down to timing. I don't want to wait for a 40 tick candle to start rotating and give me the change in deltas and all that stuff. I want to get there quicker and I want to let it run. I want to get to the party as early as possible and stay as late as I can because I'm here to party. Make sense? So that is my theory. That is my theory. So I just pulled this up and started throwing some numbers at it, and lo and behold, it looks pretty darn tasty, if I do say so. So we're only taking one trade in each direction. So we go long, we wait for, or we go short, wait for a long. Long didn't work. Fine, cool. I'm going back short. Short's done, going long. Long didn't work. Funny. Maybe we should stop taking longs. Got a short, we're going short. That's it. One trade per direction. Get as much out of it as you can and move on with your life. Okay. So this is my theory. This is what we're going to optimize, and we're going to go see what we can get out of it. Sound good? Sound good? That's it. I'm just going to work on confluence signals. It's a different, what I'm doing is I'm trading the momentum, the shift in momentum from long to short to long to short. It's really, if it worked in every direction, it'd be like a dream come true for traders, is what every trader wants, to be in a trade all day, every day and making money the whole time. But alas, we're all traders and we know that's not always possible, but we'll do as best as we can. So let's pull up a new strategy window and I'm going to show you how to optimize this thing. Okay, so we're going to pull up the new template that I just saved and HFT trap trader. We don't need any of that stuff. All I need is confluence. Now the delta look back, I'm going to do this again. The delta look back is set to 10. Now, again, why would I want to set it to 10? Because I want to control when I get the shift. So we have, here's the low. We're all red. When do we shift to all green? Well, we still have cumulative deltas, red, red, red. Starts to shift to green. That's the first time we have all green. I went in. Now notice it's taking a little longer because it's set to 10 bars versus say 4 or 5. 4 or 5 is going to give you an earlier signal. You might end up getting in here and then you take on some heat. I don't want to take on heat. I want to get in when the market's moving and primed to move. Okay. So sort of a reversal with confirmation is really what it is, which is exactly what order flow traders want to do. I mean, ask an order flow trader. Okay, so we've got 5 as the minimum cell coloring, meaning in order to get a confluence signal, I need 5%. Now I do need to show you one other thing before we dive in. I'm sorry. Here. Okay. So do you see how we've got this coloring right here? That is absorption. Now, there's no signals built around it, but it will paint the chart. Now, you can also set it to back paint the candles right in here. So what does this mean? This means you go from positive cumulative delta, all green, and then you get a bearish bar with negative net delta. That's absorption signal. Correct me if I'm wrong, but that's the way I understand it, Jeff. It's been a while since I've looked at it.
Yeah, I think so. I'll look it up and just make sure I got the details right and let
Cool.
you know if it's not.
Been a while since I've traded that, guys, but that's what the absorption's doing. The idea is that you have the aggression in buying and selling is starting to fade. You can see here you had some absorption. It pulled down a little bit. That led to a pullback. Let's see if we can find some more. Yeah, here we go. Selling absorption. That's the sellers are absorbing those orders and pushing the market back down. Sellers, whoops, are absorbing these orders, pushing down. You can see that when this is happening, there's a lot of reaction off of these. And so it's something that, hell, you could just turn it on when you're seeing that kind of stuff come in and go, okay, that's my sign that the market's rotating. Now I'm going to turn it on as soon as I get a confluence order, which happens here, and you get a beautiful trade. So again, there's a lot you can do with it. You can trade it semi-auto if you want. You don't have to. We're going to optimize this together and see what we come up with. Okay. Where's my, here we go. Oh, we're just going to do 10 contracts. I've got two different orders here. One is set to get me out at 40 ticks because it's set to 1-to-1. The other, I don't have a target. So what's going to happen here is it's going to trail based on what I tell it to. Now I've got this set to 40 ticks as a stop. I've also got a trail stop of 40 ticks set to trail after 40 ticks, and it's going to trail by 40 ticks. That's it. So hopefully I can, and we can optimize that stuff, right? It's only trading from 10 to 11:30. Why? Because that's the hours I want it to trade. I'm limiting it to one trade in each direction. Like we looked at, I only want to take one long, one short. I have no filters in here. No moving average, no market structure. I'm waiting for a rotation and then momentum to kick in. So what happens is you might get to the party late if you have a filter based on structure, based on momentum, based on moving average. That's more for directional breakout type stuff. We don't need it for this. So I turn those off. Absorption look back. You can look in the manual on this. And then max excursion ticks distance. You want it to be at least your bar size or greater, if I remember right. And then let's test. We'll try to test like 4 weeks, but I'm going to actually end it on 1 week early. I'm going to end it at the end of the 26th. Let's end it here on the 19th. I'm going to test 4 weeks. 1, 2, 3. This will be the 4th week starting on the 25th. That's 4 weeks of data. So what I'm going to do is I'm just going to start here and I'm just going to run. Am I connected? Yeah. Okay. I'm just going to run a back test to get us started. I have no expectations that this is going to be great. That's what optimization's for. So let's see what we can come up with here first. I'm like furiously drinking water and my voice is still struggling today. Everything's blooming out here, so allergies are probably kicking in. How's the audio now, guys? Still doing okay? Am I getting any issues? I just want to kind of be able to diagnose this stuff. I don't hear it on my end, obviously. But if there's issues, I need to get it fixed.
You've been pretty clear for quite a while now.
Okay, cool. All right, good deal. So, all right, so we've got really no profit, a massive amount of trades. I don't need nearly that much to back test and optimize. So what I'm going to do is the first thing I'm going to do is just limit the amount of trades by bringing this into 2 weeks instead of 4. So let's go 8 through 19. Is that what I want? Yeah, that's 2 weeks. All right, so let's rerun it more recently, and then we'll go ahead and start optimizing. The other thing I can do as a starting point, when we go into optimization, I'm going to take some notes here so we can illustrate some things. With optimization, you have several priorities with optimizations. The one is timing of entry. Are you too late or too early? The next is location of stops, targets. Again, too wide or too narrow? Are you getting out too early on a stop, on a target, and so on? Okay. Barry says, yeah, a strategy that loses consistently is great. Just do the opposite. Which I think you've actually done before, if I remember right. Too funny. So that's what we're looking at for optimizations, right? So let's go in and check it out. Prefer to use market replay to back this game. Yeah. Playback is For this, I wouldn't use playback until you've actually got something you're happy with, and then maybe look to try it. Playback or replay or whatever, it's I don't know, it's not great, and there's really no reason to. We've really completely redone the back testing engine of these algos with NinjaTrader, so you really don't have to. They're pretty accurate. Reason you're using NQ instead of MNQ. I'm glad you asked because I wanted to use MNQ. So I was wondering why it's showing $600,000 in gains. Well, there you go. Thanks, TJ. Thanks for looking out for me. I'm like 600,000. That seems like a lot, but you know, what do I know? That'd be a very nice payday for your brokerage. You'd be their VIP client and never made any money. I think it's having to download data. There we go. There it goes. No, I haven't thought of it, but it's pretty funny. All right, so we got 500 trades. Still a lot. That's a lot of trades. Let me just check my time. 10 to 11:30. Yeah, interesting. That's a lot of trades, man. 20 tick full range. Yeah, cool enough. All right, let's go check out the chart. Actually, before we do that, sorry, I lied. I want to bring it down to just one order for now. Okay. I just want to see what our timing is first before we look at adding runners and complicating things. We're going to do a little bit of light optimization. I'm not going to go real deep into this. The point of doing this isn't to necessarily come up with amazing settings. If we do, great. But the point is just to show you how it's done.
By the way, Jim, somebody asked, what about the templates that Sean was showing yesterday in the event? And we'll put those up on the site to download ASAP, either later today or tomorrow.
Okay, cool. Yeah, good to know. Yeah, we've got those ready. Those will be definitely yours, all yours. Run with them, see what you can do with them. All right, so we've got 258. You're going to have a hard time using 6E with order flow. The reason I say that is there's just not a lot of tick count with 6E. You might get like 4 ticks a minute. It's going to be pretty tough. I'll just tell you, it's pretty tough to optimize based on that. There was another question on, can you use micros? Is there enough volume data to use micro versus full size or minis? Yes, there is absolutely. Most of the time, yes. You're going to have a tough time with MGC. You might have a tough time with you're definitely going to have a tough time with micro on Bitcoin. In fact, you really would have a tough time even on Bitcoin. And then any of the micro currencies, again, probably not going to work for you. So yeah, micro crude is fine. You'll do fine on micro crude. Yeah. No updates on HFT. It's the same. Yeah. And yes, we are recording and we'll absolutely get that out to you. No doubt. All right, cool. Let's go in and check out the chart. I just want to see what the algo's doing first. Again, it comes down to timing of the entry, stops, targets, all that stuff. So I'm going to start out by looking at that, and then we'll start optimizing. Now, there's kind of different approaches to this. If you're a quant, you may look specifically at statistics and data. I'm a trader, and I'm more biased towards letting my eyes tell me, what to optimize. There's not a right or wrong to it. It's just a matter of what works for you. Okay, so this trade was not great. Why? Because we had this whole move down that would have triggered an order up here, but it didn't. And so it got in down here. Not great. So how do you get around that? Well, what you could do is wait. If you're short coming into the market, you set the algo to long only, and then it'll take the first long. And notice it took the order here. Actually, that was the right timing. So cool. That one looks good. Good timing, good entry, good exit. You couldn't have done that one better, actually. So that's a great trade. Let's go to the next one. First short, going the other way. Again, good entry. Got some room to run. Came down a little bit loose on the target. Had to kind of dip through a couple times to go down and hit target. So maybe a little bit too loose. Let's go look at the next one. Yeah, good timing on the entry. Not the best location getting into resistance here, but of course the algo is not going to know that. And then the short came in here. Yeah, off of this flip. And that one's an interesting one. Yeah, didn't work. You could say the stop was too tight, because if you had had it a little looser, it would have went down, but really it's just a bad signal. Maybe a little bit too quick on the entry, actually. We might want to slow that down a little bit. And the way that we can do that is by adding more bars required for the delta, cumulative delta. So that'll get us a later entry versus sooner. Could we have gotten an earlier entry here? Yeah. What about this one? Could we have got in sooner? Yeah, but then we would have sat through this. So was this bad timing? No. Maybe a little bit earlier would have been better. And then this one, we already talked about that one. This one could have gotten in earlier, which would have been, maybe down in here. So we might even be able to go earlier on the number of bars. Let's go back a little bit, go back another day. As a hint, if you want to go faster, don't use the arrow, use the page up versus and page up, page down. Okay, there faster. Cool. There we go. So there's the start of the session. Again, first trade, you're probably just skipping it and saying long only. And this one came in late. This one was kind of late to the party, but it was pretty choppy in here for a while, which is why it didn't convert quicker. And then this one again, a little bit late. I think we could probably go a little bit earlier on these. This one's definitely late. This one, yeah. Maybe it would have been better to get it here. Cool. Yeah, exactly. And that's another factor to look at too. Like if they're going your way first and then they turn, like this one is just, it's like a couple ticks too big on the target, And so we can go in earlier and probably reduce our target and stop a little bit in the process as well, because by getting in earlier, we don't have as much, as big of a kill zone, if you will. So let's try that. So that's kind of my observations as I'm looking at this. Otherwise, it looks pretty good. Yeah, this one's a little late. So let's start optimizing now. Okay, so what we're going to do is go to optimization. And the numbers did not carry over from my back test. So what I need to do is I need to go in here and I need to pull up the template again. And then pull up the template again. Seriously? What is going on? That's great. None of them are pulling over. That don't make no sense.
If you save it to the disk and then pull it back in, and then you load it, it usually does it.
Yeah, maybe I just need to save it one more time because it was from the chart versus back test. That's probably why. Now let's pull it up and see. Yeah, there it goes. Yeah, it's because it was saved on the chart, not the backtest mode. Good call, Jeff. Everybody give Jeff a round of applause.
Ninja's kind of quirky.
You gotta know the quirks, don't you? All right, so cumulative delta look back. We're definitely gonna do that one. We're definitely gonna do this. We're gonna look at initially, I'm just gonna set these to 0. I don't care about quantity just yet. But I just want the first trade to start. Stop loss, we're definitely gonna look at. Because the stop loss is affecting our risk reward as well, our targets, because targets risk reward, which we can optimize that as well later on. And trail is going to be, kind of factored by the stop. And so none of this stuff is applying right now because obviously we have 40 ticks as a target. So what I'm going to do is I'm going to set these to zeros to start because I don't, as we yet anyway. Cool. So let me just get these out of the way. Time we'll look at later after we run some tests. And then I don't want any filters yet. Cool. So dates, I'm going to go 8 through 26. And then we're going to go based on net profit. There we go. Now, let's go in and start optimizing. So first thing I want to do is optimize these two. So cumulative delta look back. I want at least 5. Well, I want at least 4. We're going to go 4 to 10 by ones. Minimum percent for coloring. I'm going to go 4. No, let's just go 4 to 10, as that's 7 times 7. That shouldn't be too bad. So we're going to start with these and see what we come up with. So we'll run that, and then what we'll do is we'll take a peek at the charts again, and then we'll go through and start going a little deeper. So the way that we optimize is we start with the algo settings. Algo settings are first. Then we go into some of the stops and targets and stuff. Stops, targets, and so on. Then we go into filters, which would be like moving averages, momentum, structure, that kind of stuff. Did I set it for 3 weeks? Well, we'll see. We'll see what it does here, Randall. So it's running the first test, and then once it's done running the first test, it'll kind of zoom forward. Yeah, I do. Oh yeah, I did. I did do 3 weeks. Yeah. What the heck? Why not? We'll start with 3 weeks and then see what we come up with. Man, I can't believe it's 5 o'clock, past 5 o'clock already. Where'd the day go? How much faster is this going to be in tick place? Be like a snail and a falcon. It's interesting. I actually, while we're waiting for this, I had a falcon right outside my window, and I moved to a new office that actually has windows. It's amazing, but I'm kind of out in the middle of nowhere. There's a lot of critters and animal life. Anyway, there was a falcon that had apparently caught a bird of some sort and was like going to town eating this bird right outside my window. And I walked out there to go home and grab lunch and pretty much walked right up to the thing. It didn't even move. It was like not phased at all. It was like I was probably 5-10 feet away from this falcon eating this bird. I'm like, Man, this is interesting. Very interesting out here. You never know. I've seen bald eagles. I've seen a lot of really cool stuff out here. Yeah, for sure, Georgie. How do we know which algo settings work for each instrument? You really don't initially until you just kind of got to look at what you want to do with your market. And just you got to kind of look at the charts and see what you're seeing and kind of develop your theory based on that. I can tell you that, some guidance I can give you is that the equities are directional markets, right? They're designed to go up. And so typically trending works pretty well on those markets, momentum, trends, that kind of stuff. With crude is not designed to go up. It's designed to go sideways. It's designed to go a little bit up, a little bit down. So reversals, less momentum, less trending, and more reversal stuff on crude or gold or 6E, any of those. That can kind of give you some guidance as to what to look at. All right, so we're just finishing up here, so let's see what we come up with. And then the first thing I'm going to do is change the dates after we get this back. Thinking about it. There it goes. All that, and it really was not great. Sometimes you have a theory and the theory comes back and it's like, no, that sucked. That was not a good theory at all. This was terrible. It was a horrible idea. Right now it's 50-50, but we'll see what we come up with here. So really none of these were really great on the look backs or the changing the look back or changing the percentage. We have 6 and 6, and we have 6 and 9, 6, 8, 6, 10, 6, 4. You can see how we get a lot less trades on some of these. But let's assume we were really into this one and we're going to go 6 as a look back, 8 as a percent. Okay, so I've got those kind of locked into place. Now what we're going to do is we're going to look at um, stops and targets. So let's go, like, I'm going to go drastic on this, but I'm not going to test every level because we'll be here forever. So I'm going to go 20 to 80, but what I'm going to do is I'm going to set it by tens. That means it's going to test 20, 30, 40, 50, 60, so on, right? Thanks. And then risk reward, I'm just going to leave it locked in at 1-to-1 for now. We can come back and test that. And then let's change the date, 15th through, let's go, that's why I messed up. Let's do that time frame. Okay. Let's see what this one comes back as. Cool. So while we're waiting for this to run, anybody have any questions, anything you want to cover again, or any questions about order flow? Now's a good time to ask because we're just kind of hanging out, waiting for this thing to finish up the test. And yeah.
One thing I can mention is that the amount of time it takes to do the optimizations will vary by signal. The confluence signal, which you're doing now, is faster than the stacked and balance. Stacked and balance is much more data intensive. So it's just, you know, something for people to keep in mind.
Yeah.
And then it also depends on the instrument. So, you know, NQ, especially MNQ. What, you know, people ask, why do we provide a template for NQ versus MNQ? You know, one thing is, you know, MNQ has more ticks than NQ, and you know, it takes longer to process those optimizations. So, you know, you may not necessarily be able to use the exact same settings for MNQ as you do for NQ, but at least it gives you a starting point for doing your own optimizations. But you know, those are some of the things that determine how long optimizations take. So, just wanted to throw
Yep.
that in there.
Yeah, makes sense. No, that's good. Good insight. Time of day, we're gonna look at that now. Yeah, we could see 10:30 is really 10:30 to 11 was the best. Didn't have any profit really on the other time frames, but this one had some pretty decent profit there. What I do want to do is anytime you have where like you've got major day that's like really sticks out like a sore thumb. Like this one is a really bad day. What I like to do is just pull up the news for that day and see, was there any sort of major news that came in that day? Well, CPI. CPI is a very major news day. And so in that case, what we can do is we can eliminate that day and it just kind of strike it from the memory. Now, some of the newer algos, you can actually tell the algo not even to run that day, which is really cool. This one didn't have that feature when we released it. So someday we'll be able to add that into these algos. But so when we look at something like this, you look at it and go, well, that's an anomaly. That's kind of an oddball day. And we can even go in and look at like this day was an outlier as well on the 15th. Well, aside from being tax day, was there anything else that came out that day? No, it was pretty easy going retail sales, nothing real major. That's going to really move the equities too much. So yeah, so that one doesn't make me nervous. And frankly, looking at it that way, it's probably pretty decent. What we can do to get around that is we can just test from the 11th forward and kind of more optimize it based on that. Right. Let's go to the summary. And what were the settings here? This was 6.8. Let me just scroll down. 30 was a good stop loss on this. So we can go back to 30. That's fine. Now, if you really want to get fine-tuned from this point, you can go 20 to 40 and go by, twos or fives or whatever. You can filter it down even more. I don't want to do that, but what I do want to do is I want to go through these one more time because I'm really not entirely satisfied with the outcome. But we've also changed the dates and we've also changed the stop now at this point. So I want to go back through these one more time. Oops. Let's go 5 to 10. Let's go 5 to 10 here. That'll shave off 2 of these tests. All right. So that'll get us down to 36. And let's see what this comes back as. Yeah, so there's a question coming in on absorption. What it is it's going from positive confluence to negative net delta with a bearish close. Those are the criteria. Usually you'll see absorption at major areas of interest. And then when you get that going into a confluence, by the way, it's a very good signal. Very, very good. Yeah, it is different than options delta. Yep. So delta is the difference of orders completed at the bid versus the ask. That's the difference in those orders. So think of it as more buyers than sellers and vice versa. Now, the other thing that you can do on this type of situation is you can also change the bar size. I've got it set pretty quick. That way I can really fine tune what I want it to do because I can still change percents and the bar settings and all that. So our look back went to 9 and then percent went to 6. So a little bit different than what we had before. 9.6, 9.7, 9.8, 9.5. 9.9. So clearly 9 was the best number here, without a doubt. And the other ones really not much different on the minimum percent. What I assume is the difference is like you're getting a handful of extra trades. So it's not that much of a difference. So we'll go ahead and look at these again. 6, 7. What I do want to look at is the drawdown. And this one has the least amount of drawdown, but didn't have as much profit, didn't have as much profit factor. So I want to stick with one of these numbers. Let's go with this one, which was 7. Okay, so now those are good to go. Now what we're going to do is we're going to look at risk reward on the targets. We're going to go from 0.5 to 2 to 1. Oops. But we're going to do this by 0.1s. Actually, yeah, what the heck? We'll do it by 0.1. Before I do that, though, I do want to go check the time, excuse me, time of day. So you go to half hour, and then you want to go by entry time, and it looks like all of them are fine, so that's cool. All right, let's check this one. Yes, absolutely, TJ. TJ has a great point saying it looks like you could also manually turn this on or off depending on where it is, reference to, say, an order block or an area of interest, which is absolutely right and would probably work very, very well for you. Just throwing that out there. I continue to ask very nicely for the development team to build something for us to that extent on some of the stuff that I trade on order flow. Someday it'll happen for us.
Someday.
We're very busy right now. Someday when the platform is already up and running.
To TJ's point on running this kind of semi-discretionarily, there's two ways to do it in the algo. One is to simply use the user interface menu button, the drop-down button on the top of the screen, because when you click that, you have an option to change the trade direction or to even turn it off there. And the other way to do is use the auto disarm feature it's in the entries section of the parameters window. If you turn on auto disarm, you're kind of doing the same thing, but it's automatically going to disable as soon as you finish the last trade. So every time you arm it, it's going to take one trade and then it'll automatically disarm until you arm it again from the drop down. So that's two different ways to do it, both very effective.
Yeah, so there's a good question coming in on settings and having to maybe optimize or redo settings. You don't have to. The settings that you've got, they're designed to serve as like an initial foundation for the settings. You might need to optimize a couple things here and there, but you don't have to do all this like we're doing. This is just for those that want to look at doing some different things with it. So this one 1.1, and then we have 1-to-1. 1.2, 0.9, 1.3, 1.4. So yeah, so really it's hovering around that 1-to-1. It wasn't making too much of a difference there. To me, it looks like, yeah, I mean, 5,300 in profit. That's going to be the best one. So we'll just go with it, 1.1. Now what I want to do is I want to test for a trail stop separately. Okay, so I'm going to show you how we can do that. Okay, so what I'm going to do is I'm going to pull up the trail trigger and the offset. Now my trailing trigger, I'm going to just set 30 to 31. And I'll explain this in a second. Ticks offset 30 to 31. Actually, I could just do 30 to 30. And then the profit target now I'm going to set to zeros. So what I'm going to do initially is I just want to know, is it even an advantage for me to run a runner? And so what I can do is I can compare that to this number, 5,300 in net profit and a profit factor 1.37. If my runner is not more of an advantage, then what's the point of having a runner? So I'm going to compare it separately to know if I should run a separate order as a runner. So let's run this through, see what this comes back as. Okay, so this is coming back, and it was not really that much more of an advantage to leave a runner. The profit's less, the profit factor's less, the drawdown's about the same. So not great. You really want your runners to be a little better than that. Let's look at going a little bigger though on the trigger. Let's go 30 to 60 by 10. And we'll do the same thing here. Let's see if we get anything better doing it that way. Give ourselves a little more breathing room on the trail stop. All right, here it goes. Initially, I started with 4 weeks and then I just filtered it down to 2 weeks. I always like to give myself a week of lag time just to see hypothetically how the optimizations are doing going forward. It just helps me know if the optimizations are going to live up to the hype, you know? Cool. So yeah, nothing really that much better. 30 ticks was kind of the number on those. So MIT targets are market if touched. So that would be like if you get slippage, then you might want to set it to market if touched. What that means is that you're gonna it'll hit if it hits that number on the ask going up, then it'll just enter at market. It'll exit at market versus waiting for the bid to go through to be able to place the order, if that makes sense. All right, so these unaffected. What I do want to do though, just to beat the dead horse, is I want to look at it with a trail as well. And see what that looks like. I want to compare drawdowns, really is what I want to do. Let's go in here. I'm going to change it to 5 and 5 on each side, so that way the sizing's the same. Because now that we're adding the runner in there, there we go. Cool. Those are fine. And just for fun, I'm going to give myself a few tests on that, and let's see what we come back with on this one. And then this will probably be the end of it here, so. Yep, it's a little less profit, a little more drawdown. So there's really with this template, there was no real advantage to leaving a runner. So we can, let's see what this came back as, profit 1.1, yep. Okay, so what I'm gonna do now is save this. We'll go back to, yeah, I can share this with you, that's fine. So let me just save it first. And then we're gonna go to back test. 9, 7, 1, and then we'll just go 10 and 0. And we'll save it this way. Stop loss, trail trigger, nada. Always run it again, just to be sure. There it is. All right, so let me save this. Yep, looks good there. You know, if all three are great, you can look at expanding it out too. You know, I don't want to go into all that stuff right now, but that's fine. So now what we're going to do is we're going to run it through today and just see, assuming we had run it forward, how would it have performed? This tells you, are you done optimizing or do you have to go back and do some more work? So we'll see. Yeah, so let's look at it. Yeah, it's a bunch of losing days in there. 422 is a big one. And then not terrible, but really not a lot of winning days. So to me, this is not fully optimized yet. You'd have to go back and redo it. Now, here's the other factor with this. If there's 165 trades, that's a lot of trades. So with something like this, where you've got a lot of trades, you do have to optimize it more. Now, does that mean you need to go back and optimize everything? No. What I would optimize is these two. Look back and percent. I wouldn't mess with the rest of the stuff. Maybe leave this locked in at 1-to-1, you know. That would be what I would optimize on this. I wouldn't look at optimizing everything else. Let's go in here and look at half hour of day. Yeah, interesting. Yep. So some more optimization needed. This is not something I'd be, willing to run yet. But yeah, gives you some ideas. Yeah, we can look at the news, what happened on the news. Really the bad day was the 22nd. I mean, oh wait, let's go back to daily. Yeah, 22nd was pretty rough, and then the 25th. So if you go into here, you can just click on the date, go to 22nd. There's nothing. 25th. Yeah, no, it's nothing. Needs work still. But that gives you an idea on the process. Gives you some thoughts on what you can try. When I ran it on the more recent stuff, I ran it as 10 as the look back. You can just go 5 for coloring, and then I had it set to 40 ticks, and that seemed to be better. 1-to-1. Just for fun, let's run this last test and see what we come up with for the more recent stuff. Now, this will also be less trades because we've bumped the requirements on the look back, which I think we looked at it and it was like, it was really too fat or too slow. So we might actually not get anything good on this one. Yeah. Cumulative net profit, 1,200, not great. Anyway, you get the idea. We can bump this down to 8 and see what that comes back as. But this is kind of the process. So there's a little bit of back and forth sometimes when you're creating new templates. So it's just to give you an idea how to do it. Obviously, we've already got a couple settings ready to go for you. So run with those. Those will be a good foundation on different things that you can run. So any questions before we finish up?
I just emailed those 2 templates to Ben, and so he's the one who will put them up on the website for you guys to download. I would probably say that at this time of day, since he's East Coast, it'll probably be tomorrow when you'll see them there.
Yeah, cool. Good stuff. Thanks, guys. And Philip, that's funny. I'm just glad you guys are hanging on. So it's kind of all over the place sometimes. I know it's a little bit difficult to pick this stuff up. So, it just comes with like anything. Practice makes progress. It's, with algos, it's all about practicing the optimizations and getting better. And yeah, that works. I would say, yeah, keep an eye on the members area. That's a better place, oh, excuse me, for us to post those. Yeah, so just keep a lookout in the members area. Yeah, thanks, guys. Thanks for hanging out. Glad to be here with you. Hopefully that helped. Yeah, let's see. Yeah, sounds good, Michelle. Yeah, I totally understand. What I would say is, we do have the swap policy too. So if there's something that's like, yeah, it's really not for me, or I think this there's something that could be better for me, just reach out to our team. We got you covered. We'll figure it out one way or another. So yeah, thanks for sharing. Good stuff. Good deal. All right, everybody have a fantastic rest of the day, and we will catch up with you soon. Take care, everybody. Cheers.